is one of the by far hottest stocks right now in the market. I think a lot of people are having the question, is Tesla stock worth buying right now? Did you miss the run up? What exactly are we expecting from Tesla coming up here? Well, obviously this thing has had just an unnatural run up. And I mean unnatural. If you look, this thing has gone up 146% in the span of around 3 to 4 months. Gosh dang. Even just year to date, this guy continued the run up around 30% so far. If you look, the 5-year chart kind of tells the story here. This was a stock that was relatively stagnant from 2015 to 2019 in the middle of the year. If you look overall, this thing pretty well was stagnant. It didn't move over the past 5-year periods. Obviously, there were some up and downs, but overall, this thing was just still. But you see, just over since August, this thing is out of control, up 167%. You don't typically see that kind of looks like a SpaceX rocket launching. That's what it looks like there. That's pure takeoff. So what the crap is going on? Why is Tesla getting bought so darn heavily? Is it worth taking a look at right now? Well, we're going to take a look at that. One thing to note, obviously, I'm going to look at the statistics of this, but first we're going to look at the core business. What do they have going on? Obviously, electric vehicle maker, the biggest electric vehicle maker in the world right now, technically. Obviously, they have the Model S, as you see here, lovely little Model S, Model 3, their top vehicle right now, this lovely Model 3, okay. Model X, which you already know how it is. Can we get a better angle of this Model X, please? Lovely little SUV design. SUVs are the top tier of vehicles right now. But what's more important for them too is your Model Y. So Model Y, big for them. They're planning on selling a lot more Model Y vehicles once they actually start mass producing. You'll notice a trend. They're all similar design vehicles. One thing I do like, and I mentioned this too because there's other electric car companies out there, I really like the pretty much all glass roof. I'm a huge fan of that. It's just a lot more immersive to have more window there. I'm just a huge fan of it. Obviously, their new big announcement would be their Cybertruck with this funky punk rock-esque logo. It's supposed to be the truck to end trucks. You know what I mean? This thing is, it's a Warthog from Halo 1. It's jagged. I feel like you could cut your hand if you just scraped it across the top there. But it's a really cool design, and it's going to really break the mold for the truck genre. I don't know, the market at least. It's going to break the mold because this is something that's so out there. The chances of it succeeding, I think, are debatable. I think it's going to perform fine. I don't think it's going to be necessarily like everyone's getting this vehicle, but I personally do like the design of it, as stupid as it looks. I like it because of the fact that I like the utility of a truck, but I don't like the design of trucks right now. Every single truck looks the exact same, and that's really the point here. Elon Musk is he's a revolutionary guy. There's no doubt. The way this man's brain works, I will never fathom it. It's obviously, the man's he's talented. The guy's brain is overclocked at all times. The guy's running calculus in his head constantly. I don't know what the heck's going on in his brain, but he's a wild man, and that's why this design came up, and I like the design of it. I really do. So I think there's a chance that the Cybertruck can be pretty successful. Overall, I don't think it really will, because most people that are going to buy trucks typically they're going to stick to their best-selling truck, F-150, Chevy Silverado. That's really, unfortunately, how it's going to go. And I think they will realize that, certainly. They had a lot of pre-orders for this vehicle, and the reason for it being people can just really back out of that pre-order as soon as they want, full cash refund. So I think a lot of people, and I don't want to say this, just obviously in the internet era, people probably just to post screenshots, and I know it existed, They probably pre-purchased one just to post screenshots saying that they were getting the Cybertruck. Most people probably aren't going to be, at least truck fans aren't going to be really interested in this vehicle. So really the goal is to bring a new market to trucks. I like it. I mean, this thing's freaking, it's bulletproof. I mean, this is an Army vehicle. Let's just be frankly honest. And I would love driving this thing around. It'd look cool. Not compensating, I promise. Maybe it's just a little bit. But no, I think it's a really cool design. I'm a fan of it just because of the utility of trucks. Something I'm going to need eventually. And obviously you have your Roadster, their drag vehicle. Why can't I think of what to call them? Supercar. There you go. It's their supercar. Right now, the fastest electric vehicle in the world. Good for them. I love that. That's obviously not like a commercial product, and obviously they have their Tesla Energy for home charging stations and stuff like that. Obviously it comes with solar panels. You can do solar panels. Power walls for storing that energy, 24 access to backup power. Tesla Energy, big portion of it, a lot of it they're really pushing through for clean energy through solar. That's kind of their main dealio there, so that's pretty cool. Obviously their main business here is going to be in the Model 3 though. At the moment, they're really trying to shift that, potentially get that Model Y to be the top vehicle. To me, I get the design of it. It's just a little bit spherical. Spherical! That's a Drake and Josh reference, if you didn't get it. But it's a very spherical vehicle. It's just like a little bubble. I don't know if I like the design too much of the Model 3. I do like the all-glass roof, though. That is a huge... I'm a huge fan of it. I don't know who this guy is in there. Looks like Derek Carr almost. The Model 3 or Model S being just it's just a generic sedan. I mean, nothing too crazy going on there. The Model X, the vehicle of the future for them, 5-star safety rating. It's got the DeLorean back doors. Everyone wants the DeLorean rear doors, don't you? I don't know about that. So my real question for them, and usually you see these vehicles, they're top tier in terms of range, top tier in terms of performance. They make very good vehicles. Tesla makes very good vehicles. There's no denying it. Let's bring back the Cybertruck, because that's what I want to look at. But my question is, where do you go here once people start catching up? And I think, hear me out. I mean, Elon, if you're listening to this, what's your next big vehicle besides this Cybertruck? How are you going to break that mold? And in my opinion, I think they really need to bank on their advanced autonomous driving network, and I think they need to make a vehicle that is more of like a luxury stay type vehicle. If you know what I mean, it's more like instead of focused on it looking like a car, it should be a smooth riding vehicle. And the interior looks almost like a room, you know what I mean? Where there's more like couch type environment, lift up, hear me out. You got little end tables that come up from the floor. We're talking about the future. How's Elon going to do this? In my opinion, they need to bank on that autonomous driving. They need to be the first to make that, because once other vehicles or other companies start making electric vehicles that look the exact same, how's Tesla going to stay competitive? Obviously, autonomous driving, they are top in terms of that. Number one right now in terms of their autonomous mapping network. There is no denying that. And again, I do think if they bank on that and they go ahead and create a vehicle, I don't want to say, throw it out there, but like NIO makes or is in process of making the Eve, which is completely just a vehicle meant for relaxation and enjoying the drive. You're not supposed to be focusing on driving. You should have it for enjoying the drive. It's a larger vehicle, a little bit larger of a vehicle, but there's a lot less seating in it because it's more of a free roam. You get to enjoy the space. It's like a living space as opposed to that, which really is where we're headed for the future. And I want to see Tesla come out with an idea like that. That's really my thing for them. That's just some of the core aspects of their business. Obviously, I'm a little bit wild in terms of my envisions here. Oh, look at this thing. A little bit wild. Let's look at the stock itself. That's just explaining Tesla to you for a little bit. I went a little bit overboard, I know. I get talking. So this company's trading at a market cap of 101 billion, right? Now, the second most valued automaker in the world. Is that a little crazy? I mean, maybe. So enterprise value of this company, you could buy this company for 112 billion if you got 112 billion sitting around. I don't think you do. I would love to. So right now, obviously, not a profitable company, as you see from this PE ratio, non-existent. A forward PE ratio right around 100. Yikes. And that's not necessarily super accurate right now due to the recent run-up, but just take a look at that. Price to expected growth of negative 11.12. We don't like seeing that. Price to sales. Price to sales is a lot more manageable in this company of 4. Not insane, but the price to book of nearly 17 is rough. That's what we don't like. We don't like seeing that. Yikes. That's all I can tell you. So let's go ahead and take a look at this revenue over time. If we're taking a look at this company's revenue, what do we like to see in this balance sheet? Well, if you look since 2016, revenue has been increasing quite significantly. This has been a significant and consistent revenue increase, which is good to see. It's by large amounts too. So one thing I do want to say, obviously, if you're talking about a revenue of 24 billion, but trading at a market cap of 100 million is a little absurd. What don't I like to look at here? It's going to be this net income line. Obviously, this company is not a profitable company. That net income of negative 827 million. Just saying, negative 827 million is rough. I don't like seeing that much, but what can you say? On an EPS standpoint, we're going to be seeing that with quarter 4 earnings coming up this week. So I'm excited to see what happens there. But this is obviously preliminary of that, so we don't know what's going to happen, if they're going to report some profitability or if they won't. But that net income line, I just really don't like in a company. I don't like to see negative. Something about it. I don't like it. If we're looking at a screenshot of their earnings, obviously they're going to be reporting earnings next week here, this upcoming week. Actually, probably, I think 2 days after this video comes out. I'm recording it just a little bit early, don't worry. We're actually expecting $1.75 in terms of EPS, so they're expecting profitability. So Tesla here, they're really going to need to hit this mark. With how much the stock's run up, they really need to hit this mark. And if you've seen the past, this previous year, it's not a profitable company yet. Certainly not. Not good. You don't want to see a negative $2.90 EPS line. So their Q4 last year, they put up an EPS of $1.93 a share. They're only expecting $1.73 or $1.75 this quarter. So that's a year-over-year decrease, actually, in terms of profitability. Not what you want to see, but I get it. Really, you just want to see profitability at all if you're a shareholder of this. If they post a non-profitable quarter, I think this stock has a decent chance to get reamed. And I don't want to be too rude about it, but the way it's run up, I think it's in the cards. Also, my other concern with just how much it's run up is if there are unfavorable market conditions, such as a crashing auto market, recession type environment, I got a bad feeling that stocks that are valued at the level like Tesla is, which is an absurd valuation, they're designed to get hammered. I hate saying that way, but really they're just waiting for it. I don't want to be negative, but if you look at, you go back to the previous recession or the dot-com bubble, I'm not saying these are valuation levels of the dot-com bubble, but the valuation is absurd with this company still. So I just wanted to throw that one out there where you could lose 50% of your investment within a week's period. Just throwing the option out there. It could happen, but if we're looking at other estimates, though, they're expected to be profitable for the full year of 2020. And that's what Elon gave out too. He said he would be profitable 2020. So we're going to be really excited to see what this quarter 4 looks like. Going back and forth a lot, but I'm excited to see what happens. Revenue estimate supposed to be around 30 billion actually for 2020 as well. That'll be pretty exciting to see what they do there, because that's going to be a good growth for them. Obviously, the stock's still going to be overvalued at those time, but I mean, what can you say? Next, we're just got to take a look, obviously, at revenue over time. Just take a look at how revenue's actually declined just a little bit since quarter 4 and quarter 3 of last year of 2018. So revenue hasn't hit those this year yet, but they'll be getting there. We're expected to be somewhere around the $7 billion mark for this quarter, so we'll see how they post, what they post, and what that looks like. Next, obviously, I want to look at this balance sheet. Oh, because unprofitable companies, I don't like to look at the balance sheet usually. But for Tesla, I got to say, I'm not super upset with this balance sheet. If you look at this current assets, and we're looking far right here because this is most recent quarter, okay? $5 billion in current assets. Not awful. That's not bad. Total assets of 32 billion really. So okay, I see where you're going there. But what kind of concerns me too is going to be, it's not absurd. This accounts payable of $3 billion, $3.5 billion. Not absurd. It's obviously right around their cash amount. Their total long-term debt, honestly, surprisingly lower than you might think at $11 billion, but it is a rising number. What concerns me too, obviously, with this long-term debt is they have upcoming in 2020. They have a couple of their convertible notes they handed out to raise capital. They're going to be due, so it'll be interesting to see what exactly they're going to owe in terms of that. I mean, if you look at the statement of cash flows, negative, just money loss all over the place. I mean, what can you say? Money loss, it's not what we're looking for. But overall, I expect a worse balance sheet out of this company, So it's not horrendous. One thing to note regarding this is that Elon Musk is probably one of the best capital raisers in the world right now. I don't think that's that absurd at all. The guy can raise capital like no one else. He raises money like no one's business. Anyone will give him money. He's got plenty of money to give. So, company will stay afloat, in my opinion. They just have to keep, really just need to stay competitive once other people get in the market. So those are the financials of the company. Just based off those, I'm not a huge fan of it at this price at all by any means, but we'll look at some of the news related to it. So what are analysts saying? Wedbush recently raised them to a $550 price target, right around where they're at right now. So nothing wild. It says they're expecting higher guidance for 2020 and good demand in China. China opportunities worth $110 or $100 per share. Their extreme bull case, $900. Oh gosh, that's one thing I do want to note here. Just look at where this thing fluctuates. So obviously the street high of $900 now for the price target, but the low is $200. So this is a stock that is just in uncertainty. I mean, no one knows what's going on with this thing just because how much it's fluctuated. It's just an interesting question. I also just wanted to mention too, obviously recently we had a U.S. Senator attacking Tesla's Autopilot, saying that they should rebrand it to make it clear that it is driver assistance and not fully autonomous, because they truly aren't fully autonomous at this point. They're still working on mapping out every single road and street, but it'll get to a point where it is. So I understand that because it's led to crashes for sure, people not paying attention to the road, and the vehicles themselves, while they've been on autopilot, have crashed if they're in unfamiliar roads. But that's the point of them mapping that out, is that over time those vehicles will learn that. What else do we have? Again, as I mentioned, Tesla joining over $100 billion market cap, being the second most valued company. What do I want to compare that to? Well, yikers. We're going to compare it to, well, one stock I hold, Ford, which Ford in 2018 put up 160 billion US dollars, all right, in revenue. Just going to put that right there. And not only that, they made a profit, okay? What's Ford trading at? They're trading at a market cap of, you got that right, 35.6 billion. So Tesla's trading at near 3 times, well, really they are 3 times that valuation right now. 3 times that valuation that Ford is, with 1/10. That's rude. I'm sorry. I don't mean to be disrespectful. Like 1/7 of the sales. Am I the only one that finds that kind of absurd? I understand the point of it too. Ford's a long-standing stock. The hype isn't necessarily there, so that's why it's not trading as high. But Ford makes a profit. Ford does more in revenue. I get it. And on top of that, Ford pays a dividend. That is a factor in terms of the share price too. Ford pays a dividend. You got to consider that. They pay a pretty high dividend. But I just wanted to compare the market cap there. If you compare the market cap, I really don't like Tesla's valuation. I just got to be honest. If you compare it to anyone really, those are the kind of companies I don't really invest in. It's bought up for the hype of what it can be one day. My only concern is now that it's at that price, it's not going to fall into that valuation if things actually go as planned for another 4 or 5 years. So are you expecting the stock to stay stagnant for another 4 or 5 years like it did 4 or 5 years prior to this? Because if you did, I don't know what the point of holding the stock is still. I think it's worth selling out of because there's not really creating that room to grow unless they make any sort of big announcements, which obviously they're due for. They always do. But I just don't see the value right now at these levels. I really don't see it. I didn't really see the value at the $350 levels that they were at prior because they were stagnant for over 5 years. It's a stock that the valuation just doesn't make any sense. And in my opinion, this is not a stock worth buying right now. I got to be honest with you. I think people can make money off of this. There's no denying. There could be money made off of this. This earnings report is going to have a huge impact on the stock. But overall, it's hard to say. It's hard to say. I'm not a fan of this stock. I can tell you that right now. I suggest not buying. That's my opinion. If you hold it, I'm not saying you have to sell. I'm not saying that necessarily because this market is so crazy right now. My only concern is if we get into a correction status, correction market, the market's correcting, it could be hit very hard. I just want to mention that as a potential. But what can I say? That's all I got for you. Really hope you enjoyed.